All right, everyone, here we are with ticker symbol OPTT, Ocean Power Technologies, Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow, and to all my subscribers, welcome back. So OPTT had a bullish run, and this is the first sign of the bears definitely trying to dominate this chart and bring it below as close as possible to the 50-day moving average, or possibly even cross it. So right now, a lot of investors are like, did the bullish run end, or will this bearish run end before it continues? So right now, many people are probably like, whoa, this was rising, all of a sudden it's dipping. Did the bullish run end? And that's the main question. So for this bullish run to continue, I'm going ahead to do this video so that you guys can be well aware and pay attention to these cues tomorrow. For the bullish run to continue as of right now is 365, the first resistance level that needs to be broken through. And it's not what if the bulls can, or what if the bulls get close to it, or if they kind of sideways hang out. They can't do that. This 50-day moving average is catching up to the price, and by default will make the stock actually fall into bearish territory, which will then give the bears some leverage to bring this one down to newer lows. As of right now, we're getting closer to the 50-day moving average by falling down and the bearish run happening, and also the 50-day moving average bringing itself up closer to the price. So the bulls need to break through 365, turn that into a support so they can start to wake up to newer highs and newer resistance levels. On the other spectrum, we have the support level, and this support level is 269. If that gets broken through, the bears are on their way closer to the 50-day moving average and also working their way down to newer lows. So it's very important to pay close attention if 269 gets broken through, because between the 50-day moving average of 249 and the support level of 269, there's that level of uncertainty where we're still in bullish territory, but the bears can quickly bring this one down to cross the 50-day moving average and get into bearish territory fairly quickly to hit newer lows and newer support levels. So I want to emphasize that if this gets crossed at 269, super important to pay very close attention to how this stock is behaving. Are the bears bringing this one down fairly quickly, or are the bulls trying to reappear and bring this one back up? Super important to keep those numbers in mind. I hope that with these cues, you guys will be well equipped for tomorrow's trading day. And thank you guys so much for watching. If you feel inclined or encouraged to subscribe, please do so. But don't forget to click on the bell by turning on all notifications. Share this with your friends and community. And don't forget to hit the like button and let me know you watched this video. Let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens. For the most part, not every time, but for the most part. But on the 21st, which was a Monday, it was rising up and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date, it rose up. Now, on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September. And the next one was on the 6th, which just happened yesterday. And it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.